Step 90, Intro to Taxes. Do you know what our highest federal marginal tax rate is? That's all right if not, but do you know what a marginal tax rate is? If not, that's what this section is for. The highest federal tax rate in 2019 is 37%. If you make more than $510,000 as a single tax filer, you'll pay 37% on those dollars earned to the federal government. However, you won't pay 37% on every dollar earned. Let's pull up a graph of the 2019 tax rates. These are progressive taxes, meaning your tax rates increase based on your taxable income. So, if you make $100,000 in a year as a single tax filer, this is what you'll pay. On your first $9,700, you'll pay 12% federal income taxes. As you make more than $9,700, you'll start to pay 22% federal income tax, up to $39,475. Once you exceed that amount, you'll pay 24% taxes on the next dollar earned, all the way up to $84,200. So on and so forth as you move up the tax bracket all the way up to 37%. One thing to note with taxes is that every single person gets a standard deduction automatically when you file taxes. Single filers get a tax deduction of $12,200 and married couples get $24,400. That means that our single person making $100,000 in the earlier example now has made $87,800 in the eyes of the IRS. All this means is that there will be less taxes paid overall, not that income has to be given back. Our single filer example who made $100,000 only has to pay taxes on $87,800 due to the standard deduction of $12,200. Another thing to be aware of with our current tax environment in 2019 is that we are closer to all-time tax lows than we are to all-time highs in regards to taxes paid. Back in the 1940s, the highest marginal tax rate was 94%. No joke, 94%. Go look at a graph. And tax rates have been steadily lowering for years now since the 80s, but our national debt has also been steadily growing since the 80s. Not to get too political, but with an exponentially increasing debt and historically low tax rates, I personally see taxes rising in the future in some way, shape, or form. There doesn't seem to be any other option. So what does that mean for you? That means to get into as many tax-free investments as you can, such as the Roth contributions that we've talked about. Furthermore, did you know that taxes are scheduled to go up at the beginning of 2026? It's already scheduled to. It's not something to be voted on or anything like that. So as much as it makes sense, be sure to get your money into tax-free assets so you don't have to pay taxes on the future, even if rates are much higher or you're making a lot more money and are in a higher tax bracket. So be sure to get your money into as many tax-free assets as possible so you don't have to pay taxes in the future, even if you're making a lot more money or if rates are just a lot higher. And again, the best tax-free vehicle is a Roth contribution to a 401k or to an IRA.
So that wraps up part 9. And hopefully this section helped you to take the measures to financially protect your family, look at different things regarding insurance, better understand what self-employment looks like. You've addressed your taxes and your inheritance. You've looked at your financial accounts, and hopefully you've started to go digital. In the next section, we're going to cap off this entire course and talk about how to excel at financial independence. So hopefully you can see the light at the end of the tunnel because we're almost there.